Earning interest on your crypto. Are you tired of just letting your crypto sit in your wallet, gathering digital dust? I know I sure am. Why not put it to good use? Work that crypto like a rented mule by lending it out. Financially savvy folks know that the key to wealth is earning interest and not paying it. So let's do that. And let's dive in. After introductions, of course. You're watching Finance Squared. And on this channel, we love making the complex simple. And let me tell you, finance is a complex topic. But it doesn't have to be hard. The question then becomes, who are you? Are you looking to expand your crypto interest earning power? Let us know in the comments down below. And be sure to like this video if you get any value out of it. And trust me, this video is jam-packed with it. Crypto is changing the financial landscape faster than most people will have predicted. And while there are still many problems that it needs to overcome, crypto will free many people from the shackles of financial middlemen everywhere, easing the way people do their finances. But just because something is easy doesn't mean it isn't complex. And crypto and decentralized finance, or DeFi, is a very complex topic indeed. The topics of finances are complex in general. There are so many financial instruments out there, each with different promises and each with different risk profiles. It's hard to know what to do or what to pick to power your financial life. But one thing will always hold true. If you want to improve your finances, earn interest. Don't spend it. Well, sometimes it's okay to spend on interest if the value you get back, either in payments such as rent or profits from the appreciation of an asset or business, is greater than the total interest paid. That's another video entirely. Like and subscribe. Nevertheless, the concept of earning interest and not paying it holds true across financial instruments, and crypto is no different. Today, the crypto loan industry is enabling average Joes to borrow and earn interest on crypto. Let's look at the ways how. We've talked about ways to earn interest on this channel before, specifically on savings accounts, mutual funds, bonds, etc. Earning interest is something typically associated with those asset classes. Crypto has officially been added to that list. You're probably used to thinking of cryptocurrency as just an asset that day and algo traders swap back and forth. Well, that was among their first use cases. Now there are several DeFi platforms that are adding to the new asset classes repertoire. And the good part is that if you know about earning interest in those other asset classes, then earning interest in crypto should not be a problem for you. So when you deposit cash at your bank, specifically a high yield savings account or a CD, certificate of deposit, and you let it sit in there for whatever period of time that you signed up for, and for whatever period of time it takes for that to grow, to let the interest accrue, well, you can do the exact same thing with crypto. What the bank is probably doing with those high yield interest account savings that you're investing into them is lending them out to someone else, maybe for a home loan, an auto loan, or a credit card, something like that. And the process is pretty much the same for DeFi platforms like BlockFi, CoinLoan, Nexo, Celsius, etc. Here's how you'd go about that process. Firstly, you'd pick a DeFi platform, let's say BlockFi, since they're probably the most well-known in this space. If you don't already have some cryptocurrency, either a stable coin of some kind or one of the major crypto tokens, then you deposit cash to get the party started. Having crypto already lets you skip the cash to crypto exchange and just get down the road. But nevertheless, once you deposit your assets into one of the platforms, that's pretty much it. Sit there and let the interest roll in. Now there has to be more to it than that, right? Well, define more to it. If we're being honest here, most of the platforms that are encouraging you to invest in their savings accounts are not really talking about the risks associated with them. The reason why you can expect better rates and returns for your money is that the risks are greater. So before you dive in, let's go over those risks associated with these crypto savings accounts so you know what you're getting into so you don't get blindsided. The first thing you need to realize is that the most popular tokens that you're probably familiar with, well, they're very volatile and they're quite expensive. So if you happen to have a lot of capital invested in coins like Bitcoin or Ethereum or even Dogecoin or Litecoin, then depending on the platform that you invest with, you're not likely to get the highest return rates. The highest return rates come from stable coins, which are not as popular, but again, they're more stable since they're pegged to fiat currency. Now, the pegging to those fiat currencies sort of defeats the purposes of investing in crypto altogether, which is hedging against inflation. Because if the dollar inflates, so do the value of those cryptocurrencies. But like I've always said, with everything there's an upside and there's a downside. And the upside of stable coins that are pegged to inflationary fiat money that is also deposited in an interest-bearing account is that you can begin to approach the inflation rates that we are currently experiencing. We're talking 5 to 6 percentage points APY. Then there's the risk of losing it all. Now with earning 5 to 8% or even up to 12% on stablecoins, again, that's platform dependent. While that is awesome, there is the very real risk that you could lose a lot of your crypto nest egg. The reason for this is that crypto assets and a lot of other platforms that enable interest-bearing accounts do not come with FDIC insurance. One of the things about the legacy financial industry is the existence of insurance for your banking accounts so that in the unlikely event of a bank failure, your fiat assets are protected. Ian Kane, founder of the fintech company Turnio. Now he says that if the crypto company offering the savings account does not provide the private key associated with the wallet where savings are held, then it is possible a user's funds can be lost if the company goes under. So that is a risk you're going to have to keep in mind before you take the plunge. There's also the risk of just losing control of your assets altogether. Putting your money into a crypto savings account means that you're relinquishing your keys to the platform doing the lending. Similar to the above scenario, if the lender does vet the loan takers and that third party never pays the money back, then your crypto is gone with little to nothing that can be done. It should be noted that the fact that you need to give control of your keys over to someone else, well, that should be a major red flag. That's similar to giving over the passwords to your bank account or other sensitive financial information. So just like if you lose your bank account passwords, you don't have access to your account anymore. If you lose your token private keys, then you no longer have access to your crypto. And if the person that lost those keys is not you, but the platform that you had your savings account with, then all of that becomes more of a bitter pill to swallow. At least with traditional banks, the means with which you can get your information back or reset your account in the event you lose vital information is there. With the decentralized nature of crypto, that resolution is highly unlikely. Let's talk about the risk of more red tape. With traditional savings accounts, you can withdraw your money and close your account at any time. Not so with crypto savings accounts. Some crypto savings accounts have withdrawal limits that cap the amount of money you can take from your accounts over a specific period of time, putting your money offline when you may need it most. There also can be fees if you need to withdraw your own money. If you trade your crypto regularly, then those fees can add up. Now let's be fair. With fiat currencies, certain types of high yield savings accounts, albeit with lower yields, well, they have the exact same restrictions. Regular low yield savings accounts mostly do not. But nevertheless, this is a common practice among financial institutions of all kinds, not just cryptocurrency. Let's talk about the risks of the ups and downs of the cryptocurrency market. If you're putting your savings away using stable coins on these platforms, then, this is not as big a worry. But if you're using more popular, less stable tokens like Bitcoin or Ethereum or Litecoin, then you could be in for a wild ride in terms of the total return on interest paid. Now, that's not going to be a problem as long as the coins keep rising in value. But the recent losses some coins have experienced and their known volatility throughout their history, well, that can provide an example of when the earnings you are expecting can go south. And that leaves us with the biggest risks of crypto savings accounts. Who is taking out these loans? Think about it with me for a second. The reason that these platforms can give you 5 to 12% interest on your crypto is that they're lending it out at 15 to 20% to someone else. Who in their right mind would borrow money at a 20% interest rate? No matter what business you're in, making more than 20% on any venture is a very, very hard thing to do. So let's assume the people that are being lent to might actually have good credit and a solid business plan. Is that business plan 21% growth solid? I'm going to speculate that the answer to that question is in many cases a hard no, which means that many people are going to be defaulting on their high interest loans, causing quite a few of these platforms to fail, hurting many individuals in the process. It's one of the reasons why I'm very cautious with putting my crypto into a crypto savings account. Sure, the earned interest seems to be too good to be true. In my estimation, it probably is. But that doesn't mean that these are bad products in general, and that you shouldn't put your money into them. Keep in mind that this is not a financial advice channel. It's a finance entertainment channel. If you want advice on whether you should put your money into a crypto savings account, speak with your accountant or financial advisor. Show them this video and ask them what their thoughts are on it. For example, did I miss anything in my analysis? In fact, that's a good question for you. What are your thoughts on crypto savings accounts? Are the interest rates too good to be true? Will you be putting your money into them? Let us know in the comments down below. Also, like this video if you like this video. And if not, let me know where I went off track. Also, subscribe to this channel for more videos just like this on topics similar to this, while keeping in mind that a goal without a plan is a wish. And a goal with a plan and no action, well, that's just a wish list. Take it easy, guys, and I'll catch you next time. Peace.